Over. Perfect. Thank you very much. Up next, I have the honor to announce Mr. Tofpik, the Head of Technical Analysis and Senior Market Analysis at ADM Investor.
Good morning. My name is Eddie Tofpik, Madam Chairwoman, Your Excellency, distinguished members, presence of various chapters of technical analysis and technical analysts overall, and those who wish to learn about technical analysis. So my name is Eddie Tofpik. I'm Head of Technical Analysis for ADM Investor Services International Limited, which is part of Archer Daniels Midland, which is a food processing company, one of the largest in the world. I'm going to go through some of the charts I use every day. And it's interesting what Trevor said. When I started, it was with paper charts, and I would look at maybe 30 a day, maximum, because it was paper and you had to update them with a very fine pencil and special chart paper. Now, because of computers, I look at over 200, 250 maybe a day, not every day, but I look at them and glance at them at least once a week and go through them. But I'm going to give you a selection of some of the charts I look at today. Okay. Before we start properly, I have a message from my compliance director, Mr. Dermot O'Higgins. Please kindly let everyone know that what you're about to present are your own personal thoughts and views, and not those of ADM, Archer Daniels Midland, Bar Flavors, Probiotics, Neovia, or any other part of the ADM group. Now get on with it. He actually said those words. So I'm going to be looking at technical analysis of some major currency pairs, as well as Brent Crude Oil, Paris rapeseed, because I think it's significant for this area, and Paris milling wheat. So a food oil and also a product for bread and various other things such as that. We'll start with the euro against the dollar. That is my chart. That is what I look at every day. Interestingly, this is a little less complex than some of the others I look at. The labels you can see on there are not for your benefit, they're for my benefit, because I forget what the actual happened that day, so I put a little note against every one of them. Usually they relate to Japanese candlesticks, which is a discipline of technical analysis, but they can revert to things such as key reversals and other ones such as that. So what are the main elements here? Well, first off, for 2023, we have a bull channel. This has been running throughout the whole year so far, and that's now roughly between 108 to 112.05, and you can see it highlighted by the arrows. This is despite a false break on the upside, which happened back in July. Now, this chart I took on Thursday, and it was trading then at 107.52, 107.32. We are indeed a little lower at the moment. I just checked, it's around about 106.60. So the undecided break of last week could actually be a break lower. And I want you to bear that in mind. When I wrote this chart, I wasn't sure about it. I thought it might be a false break on the downside. I thought it was a false break on the upside earlier in the year, but I wasn't sure. It's increasingly looking as if we have a break lower in the euro against the dollar. Now, other factors are the July, this is going back in the past, the July 2017 to November 2018 head and shoulders neckline. This is a neckline from a pattern called a head and shoulders, which was way back in the past, almost, say, 5 years ago, thereabouts. And it still plays a significant role. As you can see, It held the markets in May on the green line there. And though it was breached in July and part of August, it has gone back below it. And I say it seemingly failed over the summer, but I would keep a close eye on it as being a significant level of resistance, and it's currently at 110.70. We have a new bear channel, highlighted in red there. And interestingly, we're at the lower end of it at the moment. It's 106.25 to 108.25, and that started in July. You could call that a wedge. Some could call that a wedge. I'm not necessarily calling that yet, but I would look at it more as a bear channel. So we have a big bear channel, a mildly bullish channel, and within that, bear channel has broken out through the bottom of the Eurodollar. The first real test of this will be, and this is then, which is pricing on Thursday, if the prices reach 106.50 and then again at 105.50. And you can see them highlighted. Why? Because they are the low in late May and also the lows back in March. Now, we're not very far away from that lower channel line at the moment. So 106.50, the last market I looked at was 106.61. So it's not very far. You're coming into an area of support. I pause now for any questions. Raise your hand. Good, you will understand what I'm saying. Wonderful. I'll move on. The next one I'm going to look at is one of the closer ones to my heart, which is sterling against the US dollar, which is called cable, for long-standing reasons that it was done originally by cable across the Atlantic. Most recent action has been a form of bull channel that became a rising wedge pattern. You can see that highlighted in bright red. Prices made a false break higher in July, but it was the true break lower in early August that has seen the move. That's really where we were. We had a false break on the upside, and then the market turned straight back down and then broke properly on the downside. It was confirmed by what is called a weekly key reversal in late August. Now, there are a number of people who have this, but Trevor will recognise this because my mentor has been him and also Eddie Edwards. Eddie Edwards is no longer with us. He's the one who Trevor taught me technical analysis. And he gave me this definition of a reversal, key reversal. When you have a higher high and a lower low in the previous session, whether it's daily, weekly, monthly, hourly, minute, whatever, and it's above or below two previous closes. So that one was a higher week, a lower week than the previous one, and below two previous weeks' closes. That confirmed the move lower. Thus, we had a primary target in the 124.10 area, which we're not very far from, but we have a harder, much harder to reach secondary target, which I've marked X1, in the 116.05 area. Most of the time, we don't see the secondary target reached, but it's better to tell the truth than not tell you anything at all. So we've just about reached the primary target, which is 124.10, but the secondary one at 116.05 is a long way still to go. However, and this is the important thing, why did the market halt around just above 124.10? It's because we have the long moving average, which is currently at 124.33 and just ahead of target X. And it may be enough to hold the market. I'm not saying we'll do for certain, but you need to know that is why it's hesitating, why we have that 1 week, 2 weeks worth of hesitation in sterling. purely because the long moving average is there. And if you want to know if that's genuine, I ask you to look back on that red line, that's the curvy red line. You can see back in March, in February, there again, every time the market dropped down, it bounced up, it went below it for a short period, then it made a Japanese candlestick pattern, which is called a bullish morning star pattern, 3-day pattern, and it went back up again. So the long moving average is a dynamic number. It changes every day, but it's holding up the market at this point of sterling. And it may be enough. I pause now for any questions on this. There's going to be a test at the end of this, so I hope you're going to get it. Is there a question there, sir? No? I'm watching. Moving on. Now, this is one which we spoke about amongst us ourselves yesterday, the day before yesterday, dollar yen. And I tell you why I think it's really interesting, because it's a beautiful chart. This is the Mona Lisa of technical analysis patterns. Yes, it looks complicated, but I'm going to tell you also my theory of Japanese products. And this is something that I've acquired. I have no proof of this, it's just a theory. In many ways, technical analysis can be said to come from Japan. It's not the only place it's come from. Point of figure is from America. Elliott Wave is from America. We've had all sorts of things come from Europe and stuff like that. But candlestick theory comes from Japan. And in all the international societies, the biggest society in the world is the Japanese society, because so many of them practice technical analysis. And because so many practice technical analysis, they look out for specific patterns and features. And this is the part which is my theory. And because they look at it, some of them set traps for other technical analysts. You will get caught by something that looks like, I don't know, bullish doji star pattern. And suddenly the market will turn around and go back down, because they're trying to catch people out, usually because they know that they're watching for these patterns. Now, it doesn't apply to all markets. My personal point of view is anything to do with Japanese products. So, US dollar, Japanese yen, JGB, the Japanese government bond, the Nikkei, things like that. I would suggest you just be a little bit careful with Japanese ones, because they are so sophisticated on technical analysis, and they use it. That being said, the market has been the story of pitchfork patterns, sometimes known as the median line method. I'm not really going to go into it too much, because that would take up all my time. Can I ask a show of hands, who knows about Andrew's pitchforks here? 1, 2, 3, 4, 5, 6, 7, 8. So I would say probably about 15% maybe. It is worth looking into. Dr. Alan Andrews and Jerome Schiff, who's a pupil of Dr. Alan Andrews, came up with this thing called the median line method, which is known more commonly as the Andrews pitchfork, Schiff pitchfork, the modified Schiff pitchfork, or various things. The short version is there are 3 lines, and they use past data to project into the future areas of support and resistance. The most prominent one is the center line, median line, and then you have one above and one below. Okay. So there are 3 pitchforks that are running this market in dollar yen, and that's why it's so brilliant, because it works so well. As you can see, there's it's coloured slightly green. There is the February 2022 to January 2023 bullish shift pitchfork. The market is between the middle time above, which is currently 150.95, and the lower time below, 136.85. It is not too acute. It is at a reasonable angle. And it has captured the market from January of this year right until now, and will continue to do so until it's broken. And it doesn't look like it's going to be broken yet. I expect this one to run for many years. So it's a mildly bullish angle of attack. As you can see, the two that are there. So that's the lower one and the middle one. There's one above it, which is going off the top of the chart, but that's it. This is to say the overall bullish angle of attack of the market. So the dollar against the yen is a bullish market overall. The second one is the mid-January to late March bullish Andrews. The market has run between the lower time, which is the one that you can see marked on my chart. It's run along the bottom of that, breaking below it. But it's run then along the underside of it. Now, a lot of people say, oh, broken pitchfork throw away. I disagree strongly with that. And I go back to history that something like 10 years ago, the S&P's futures contract broke a bullish shift pitchfork, I think it was. I had it on my chart. There's actually it on the Society of Technical Analysts, me giving a lecture on this and using this one. It broke this bullish angle attack, which was much higher than the overall market. And then it ran along the underside of it. It ran along the underside of it something like 2 years. Even though it broke it still was associated with that pitchfork. So you have the lower one there, which you can see of the 3 lines. And the third one is late March to mid-July. It's a new one, and you can see it much more clearly there. Bullish Andrews pitchfork. And the market is in between the lower times, which is currently 144.25, and the middle time, which is 149. And it's mainly been under just the middle time. And to be honest, that's what you want out of a pitchfork pattern. You want it to run along the pitchfork. So when I look at you and I say, you want to know the angle of attack of the market, I'm giving you the angle of attack of the market. I'm giving you every day saying this is where the resistance will be, this is where the support will be. This is the angle of attack of this market. And that's why technical analysis works, because I can give that to you going into the future. And when it breaks, I can then give you something else, because I'll tell you when it breaks, and it hasn't broken yet. Now, things to watch for. One of the things to watch for is when you have a crossover of times from one pitchfork against another one. There is a time crossover around about the 17th of October. I don't know what's going to happen, but I can tell you what may happen. 1, increased volatility. 2, a potential change in trend. 3, a potential reinforcement trend. You can have 2 of 3 of those. So on the 17th or thereabouts, look forward to potentially dollar yen doing something significant. And then from there developing on towards possibly the rest of this year. I pause now for any questions. Good, because you're going to pass the test when I give it to you at the end of this. Next one I'm going to look at is something which may be of interest to all of you, which is Brent Crude Oil futures. I look at currencies every day, and I also look at Brent Crude Oil futures every day, because it's the one that we clear the most in London, and it's the one that we have most customers dealing business in energy. Now, the market's gone from a basing action, so it's been forming a base, really a rectangle pattern that's turned into a quad bottom, 4 bottoms. You can see along the base there between May and, let's say, just as we go to the end of June into July. And it's gone from that into a bull channel, which you can see highlighted in dark blue on that chart. That's gone into a bull channel, and that bull channel finished in mid-August. So we had the market basing, and then what you normally have when you have a nice base, you have a good strong base, you have an attempt higher. The market used that in the form of a channel, a bull channel to go higher. That finished in mid-August. We are now in September. Mid-August, the market had arguably formed what is called a bullish halfway hesitation. Now, a halfway hesitation is exactly as the word implies. It's the market's moved up, hesitated, and then looking to move up again. And the distance of the second move is related to the first, approximately. That first move, added on to the base of the second hesitation, the hesitation itself, gives a potential for Brent crude oil up to $98 a barrel, which, as you can see, is nearly off the top of my chart. That's quite a lot to look forward to if we go that high. There doesn't seem to be that much resistance in the way. It does look as if there is a lot up there, potential for it to go higher. Now, in the process, and I'm known for my pitchforks, in the process of forming that second leg, as you can see the hesitation now, it allowed me to draw a bullish Andrews pitchfork. And the market is currently, right now, utilising the middle time, the more important of the three, of the late June to late August bullish Andrews pitchfork, which is currently at 93.50, to show the angle of attack. So I'm saying to you, the angle of attack of this market, of this pattern, is at 93.50 today. It will be again a little bit higher beyond that, a little bit higher beyond that. The potential on the top side for a halfway hesitation pattern, I'm not saying it's what the market does, I'm saying what this pattern does. A pattern such as this would show around 98 and change. Any questions on that? You're all going to pass that test. Well done. Paris rates and futures. Why did I choose Paris rates and futures? I could have put Chicago soybean futures, and I had this discussion about this. There's not much really, I think, that's going to relate to Chicago soybean futures for you in here, in this part of the world. But the Paris rapeseed futures is a contract that can be used as a hedge or a proxy for a hedge for some of the production in this country and in the Balkans generally. So I thought it would be the best one to use. That also goes for Paris milling, one piece for bread. There is a lot going on in this chart. There is a hell of a lot going on. And it's very, I can't give you simple answers to complex questions. I can only give you the complex questions and maybe some of the solutions from them. The market exited on the downside from an ascending triangle. The ascending triangle is the one that you can see, which is a flat top on the purple, and there's the higher line there. That's one of the patterns we look for. It's come out of that ascending triangle, and it's already reached its primary target. It's already done that. I'm only showing that because that's what I wanted to show. It's happened most recently and where we are at the moment. The secondary target is down amongst that congestion, all those straight lines that Trevor spoke about, all that congestion you can see. And that's between 438 and 445.5. And it will be harder to reach, much harder to reach. Especially because not only is it below the long moving average, but there's a significant uptrend, that lower purple line that you can see. And that's currently at 442.75, right in the midst of all that congestion. So you have not only the congestion, you have an uptrend, and then just above that you have the long moving average. There's a lot of stuff below the market. Even though it's trying to go down, there's a lot of stuff holding the market higher. We also have potential now for a potential bull channel. And this is where it gets controversial. If some of my colleagues from the STA, UK Society, were here, we would be having a row because there is a potential, some say not potential, it's not appropriate, for a pattern called a head and shoulders construction. And the shoulder is over June, which is that bump. The larger bump is over July. And then you have the second shoulder being formed over August. Now, the problem with head and shoulders patterns is everybody thinks they know what they are. I say it's a head and shoulders because it's coming up from a low pattern. It's below, it's not literally coming in on the side, it's actually been lower than that and it's moved higher. So I'm using that potentially as a head and shoulders. Others would say you can't have a head and shoulders that low in the market. And that's a fair point. The third point I'd like to put out to this is this. Head and shoulders patterns, everybody thinks, oh, that's a topping action. That means the market's topped. We're going to see lower prices. It's going to go down. The end of the world. Let's go and dig a hole and hide. No. Head and shoulders pattern, and I'll cite, if anybody wants to do this, look up Bulkovsky's work, Thomas Bulkovsky's work, Encyclopedia of Chart Patterns. Head and shoulders patterns can be both a topping action, which is what they usually are, but it can also be a continuation pattern. It can be a hesitation or a move higher again. The trick, and what we are there for, and why it's an art, not a science, what we do, is to recognize when it's a head and shoulders top, when it's a head and shoulders continuation. So at the moment, I can't tell you which one it is because we're coming close to the neckline, we're coming close to that congestion, we're close to the lower trend line, close to the long moving average, and I want to wait and see. Doesn't need very much longer, maybe 2-3 weeks, and then I'll be able to see what the potential is. If it is a head and shoulders pattern, then we're currently trading around about 456.5. You could see a potential move down to below 400 for rapeseed, a much lower price for rapeseed than you would anticipate, if it is a head and shoulders. If it's a continuation, then you'll see higher than the high we saw in July. That's the bit where I'm going to be waiting to see which way it's going to go. And this is the point I wanted to show you, the long moving average, or the medium moving average, I should say, in this particular instance. It's currently at 454, and it's being held there at the moment in a mildly bullish. We are on a mildly bullish channel, there's no doubt about it. But it's whether this is holding it or whether the bullish channel is holding it. There's another potential pattern. Now, going back, taking all this, if I take in a number of years, we have a pattern called potentially a descending scallop pattern. It is still too early to say on that. As a descending scallop pattern is very simple. It moves down, jumps up like a ski jump, and then drops down again. And from that little jump, you can then tell where it's going to go, higher or lower. The problem is with this one, it's done the long move down, started to move higher, and it hasn't really done anything since. It hasn't gone down to give a measurement, it hasn't gone higher to show it's potentially breaking upwards. It is still too early, but it's something, if you're going to follow this market, it's something to you to bear in mind. I pause for any questions now on this.
Do you have a chart?
Say again?
Weekly or monthly for this?
Weekly or
Weekly
monthly?
chart.
This is a daily chart.
Yes. Sometimes there is low and higher time frame. It will be continuation or.
I use continuation charts. I opt for futures. Now, there's a good point. Some people say you only use the 1 month futures contract and do them. I don't. I use continuation charts because I go back many, many years. To give you an idea, my longest uptrend is on London wheat, and it dates from 1975, and it's still valid. And that's what I use. I take into account that there is changeover, there's gaps in the changeover. Funnily enough, those gaps are usually filled, but I always use continuation. For longer term looks, once a year in January, every year, I'll look at rapeseed and I'll look purely at monthly charts, the longer term picture. What the people who listen to me, what they want to know, which is mainly ADM and other people involved in this industry, they want to know what is happening right now. They like the idea of what's happening next year and the year after, but they are more interested in what's happening right now. And I'm saying to them, give it a little time, there's going to be a major move, but I can't tell you which way it is just yet because I don't know. At the moment, we have an overall move higher, very shallow move higher, and it's come down towards the lower end of that. That's all it's done. Any other questions? Your slide, you're going to pass. You get that now. Okay. Finally, Paris milling wheat, the one that's used for bread. If you're interested, the British contract, the UK milling, peat wheat, it's the one used for animal feed. The key pattern here, and it's been here for over a year, has been the June 2022 to date bear channel. You can see it clearly there. The purple line's going from the top left to the bottom right. Now, there's also the possibility of a descending scallop pattern here. But again, it's too early. In fact, this market is teasing the participants because it's going sideways quite a bit. As you can see, since about, it's had one move up and a move down, but for most of the time, we've been around the 240, 245 area since June, mid-June. Now, the recent action has been dominated by ingestion, previous areas of support and resistance. And that's both above the market acting as resistance and below the market acting as support. Those are the numbers. I'm not even going to mark them on the chart because there's quite a few of them, but 250.5 to 254.5, 258.5 to 259.5, which has the long moving averages in it, which is currently at 259.25. And then quite a distance above that, 287 to 270.25. Below the market, 238.25 to 242, which has a median, shows you how sideways, the median moving average is going sideways, which gives you the overall thing. You can see big movements in day, but between close to close, it's been basically sideways. The median moving average of 240.5 is exactly that. Essentially, it goes between 240 and 245. Then we have key support at 234.25 and 227.25. So we are getting caught at the moment going sideways. All the moving averages I use, all four of them, three of them are within a very short distance of each other. Finally, I didn't have a chance to look at this because this is the piece that is really interesting. If you look at last week's action, which is the last bit on there, I didn't see what Friday's close was, but I think it was probably a high close. We have a possible weekly key reversal, up. Can't tell you because I haven't looked at the prices to see since I've been here. So we have a higher high for last week than the previous week, a lower low than the previous week, and potentially two closes, either above or below the previous 2 weeks. You don't have that happening in a sideways market just for no reason. It is the beginning of the move. And it could have happened Friday. I haven't seen the prices. So that's something to bear in mind. It's the one thing you want to take away from Paris Milling Week is to take away that one item. We may have a possible weekly reversal. And that could be the first signal that things are happening in wheat prices. Last pause for any questions. Okay. This is my free daily, weekly videos. I don't do written commentaries. I do YouTube, and it goes out not only to ADMs, anybody who asks, it's free. It's under our regulator, the FCA, market colour and commentary. So you can have it if you want. I'll show you the details where to contact me. You just ask for it, and I'll put you on the list. Now, this is a longer term one. Once a year I do this, and I'll go through some very long-term charts. And as I say, my week chart goes back to 1975, where there's an uptrend still on it. Now, I'm mindful that, what time is it so short, but it's short enough. Here's the final bit. Read all that. There you go. Here really is the final bit, and it's more about me than anything else. Those are my details. If you want to get hold of me, please drop me an email. I'll be back on Wednesday, and I'll be able to pick it up after that. That's where I work in London. That's what I produce. Daily, weekly, and annual technical analysis commentaries on FX, commodities, stocks, and other markets. I look at things such as freight, currencies, butter. We had a discussion about the meaning of muscle. I'm a family Polish, so the muscle means butter, and here it means oil.
Depends, because previously they used fat.
Smell it.
So yeah, and that's why it's taken. So it's.
We'll have a discussion about this after, because I'm still calling it muscle. We live our best muscle. You can see me on CME Group videos, Core Finance, FX Street. I was nominated, which was very nice. FX Street's FX Sweep. I got nominated for something else again, which is very, very nice. I remember this Bloomberg conversation because that's when I started using the F word for people who follow fundamentals. You know, we don't speak about the F word. This is a family audience. We don't say fundamentals. We say the F word. So we are technical analysts, and we are right, they are wrong. Or actually, I'll put it correctly. John Murphy, who, hands up who's read or know about John Murphy's technical analysis book. Okay, so those who are technical analysts know about it. John Murphy, he said this, and I think it's absolutely fair. Technical analysis is the leading indicator to fundamental analysis. We know stuff before they do. Simple. I got nominated again, which is very nice. I also on investing.com. Now, those of you who follow investing.com, there's a video on it about 2024 and a potential GAN year of crash. There's a whole thing about that I'm going to do later on this year, about next year. Now, my role in being here, and I'm so glad for your invitation. I am chairman of the UK Society of Technical Analysts, one of the largest and definitely the oldest such society in the world. And we provide, along with your society here, information, education, examination, and accreditation for technical analysis. We're happy to do so. I write occasional articles for a free to our customers and clients and anybody who's interested, a publication called Ghost in the Machine at ADM. And I'm also a director of the International Federation of Technical Analysts, which the best way of describing it is the United Nations of Technical Analysts. And I'm one of the directors. And, oops, that's it. Yeah. Thank you very much indeed. I don't know if you can hear me?
Yes.
There's no, this is not working, but now it's working. Okay, I'm not going to hold you up too long because I know you're hungry and I hear your stomach's rumbling. The situation I want to explain is very simple. We have technical analysis is a broad term. There are not just people here who are looking to make money using technical analysis. There are people here like myself who provide information to their clients and to their company, which are there to protect the risk. Now, one of the things that you don't realize as much, I think, is that when you're looking at technical analysis, there's plenty of opportunities to try and make money, but there's also plenty of opportunities to protect that money once you've made it, and to actually look at it from the point of view of risk. All the people I speak to, I look at it, are hedgers. They're primarily involved in looking to protect exposure data. Now, it may be that they're selling grains or wheat or gold or metals or oil, whatever, but they're primarily looking to protect their movement in the market, not necessarily to take advantage of any short-term movements or even longer-term. And some of their actions can be quite long-term. They've got contracts going up many months, years, but also decades in some cases, and it's to try and protect it. And that's where the difference, I think, technical analysis do it. We're there to try and protect risk. And that's something you should bear in mind. Now, the societies, we're all members of societies one way or another here. All the societies here are there to help you try and get that ability, that qualification to be able to do that, so you can actually protect the risk for your customers and also make money for your customers when you can. There are so many different ways. We've seen, looking at today, we've seen rotational graphs with Trevor, we've seen David with point and figure, and we've seen Patrick with a new, some new and some not so new variations of MACD. I look at it very, very traditionally. I look at it from the point of view of being a pattern analysis. I use Dow theory to a certain degree. I use candlesticks to a certain degree because they work. Chart analysis has been around, candlesticks have been around since the 1750s. Renesha Homo wrote his first three books on trading ever in Japan in 1750. And that's 25 years before, 20 years before Adam Smith's Wealth of Nations, which is the first modern book on economics. So you have to bear in mind the historical context of technical analysis. It's been around a lot longer than people realize. Until probably the 1950s, nobody trusted the F word. I'm not going to say it, but nobody trusted it. Because data, even now, companies still manipulate data. Some of you may remember Enron, some of you may remember Shearson, Lehman Brothers. And some of you may remember so many other companies. I think the most recent one was
Wirecard.
Wirecard. People manipulate the data so that you're using false data unless you're actually looking at the price. And it's most important of all things to look at the price. And by that, it's not just the actual price, but the price action. The price, the volume where it's available, and the open interest, how many people still have open contracts. This is how we work on technical analysis and how we go forward. Now, there are many ways to do this. There are many charlatans out there. The societies are the best way to get through that. I use technical analysis and I use Andrew's pitchfork and shift pitchfork. And I've seen, especially on a French website, some really appalling uses of pitchforks, which are not according to Dr. Alan Andrews or according to Jerome Schiff. So people will optimize what they think is right. The question is you have to make it yourself and use technical analysis from your point of view. And above all else, technical analysis is an art, not a science. Some people may look at it and try and put it into sort of, many times I've been in conferences and say, oh, can I write a program? Yes, you can write a program, but will it work all the time? You have to have the element to be able to use your own particular knowledge of what's going on, to be able to apply that to everything you do. And it's interesting the question you said today. I mean, looking about the situation of what are the elements going forward, the individual social aspects of it. I was the first one I know of to do technical analysis of Bitcoin, which was then back in 2015, September 2015. It had just come onto Refinitiv 2 weeks beforehand, and I started doing analysis of it. It was $350 a coin there, to give you an idea. Remember that. There are also now the social aspects. One of the biggest areas of growth in all our industries is in carbon and areas involving the ESG elements. There are plenty of markets involved in that area. And we can provide the risk and provide the opportunity for people to look at and work those things out and how they go forward. I follow carbon, but how many people follow carbon? Just as an interest. 1, 2, 3, 4. There's not that many people, but it's something you need to start looking at because those markets are available and they are there to be analysed. I disagree slightly, Patrick, about, we had this discussion beforehand about lack of volume and liquidity. One of the things I look at, which is actually quite a liquid market, but has only one price every day, is price of freight. I follow the Baltic Exchange, which is a major setter for prices for Panamaxes, Supramaxes, Handymax, dirty and clean cargoes for tankers. They have only one price. They have no volume. because it's an index. It comes out once a month. But it is superbly good to actually use technical analysis. And then there's discussion about muscle. One of the things I do for a group of customers of ADN is they wanted me to look at butter prices. And there's only one contract in Europe, which is the export. Rarely trades, but it's so good to actually use technical analysis upon. So there's all sorts of markets you can look at. And you can then also look at things such as non-farm payroll. One of the things I remember that people have used, and I was thinking it's actually Dr. Bollinger who used this. He used technical analysis on American economic data and was able to provide information to the Houses of Congress in the United States for that. So these things work not just in markets, they work in anything where you could provide a chart. And that's what I want you to know, that it's available in all things. And one thing I now notice myself is I start looking for patterns in other things in my life because I'm busy looking at patterns of technical analysis. And it actually makes me a better person as well. And I just wanted to say these words. And head over to you now. Yeah.
Okay, so for the agenda, we can now conclude the third and have a lunch. Thank you for your